It's go time here again. It's about that time of day again here, folks. Just in the nick of time to get you guys going here this evening. It's time to get back to work. It is that time of day again here, folks. It's Wednesday evening. It's October the 30th, 2019. My name is Joseph, by the way. And as always, welcome back to your nightly newsletter. Now, in case you're here for the first time, don't forget, guys, I help traders find high-quality trade setups using a very simple three-step strategy that we teach and trade together every morning in our trade room. But my job's a little bit different tonight. Tonight, my job is extremely important because tonight I'm going to help you guys find the best levels of support and resistance, the best entry and exit setups for tomorrow, and how can I forget, the biggest traps to make sure you avoid in tomorrow. That's Thursday's trading session. And of course, we have a lot to talk about here. Today, of course, was Fed Day. Tomorrow is Reaction Thursday, which is the real day that traders come out and trade that FOMC announcement. We're going to talk all about how tomorrow's Reaction Thursday will play out. We'll check the calendar, and then, of course, we'll grab some charts. We got some oil, some S&P, some Nasdaq, and some gold to wrap up tonight's video newsletter. I'm going to jump in here to oil right now. Oil's probably going to be the hardest chart to prep for tomorrow. We're bearish, but we're in one of those situations where we're too low to sell and we're too bearish to buy. The two-try rule, we talk about all the time. The two-try rule is going to be your secret to success tomorrow. Let's not talk about it. Let's show it. Let's grab that oil chart. Let's grab that crude oil futures. And what do we know about oil right now? Well, I think the most important thing we know right now, looking left here, we had that big move down, right, earlier this week. We had that rally higher yesterday, but it fell apart, right? And, of course, back down to retest that low. Now, the reason why I tell you that is because you'll notice where we are. We're sitting right on that low here, and we're not going anywhere. So sellers clearly got what they were looking for, a retest of a major low, but they're not getting much further from there, are they, right? They're running into a lot of buyers down here. We call that rejection. Now, once we see those sellers getting rejected, the sellers try once, they try twice. There's the two-try rule I was talking about. And usually that two-try rule results in a short covering rally back up to the opposite side. But like I said earlier, this is a tough position to be in because we're not bullish yet. You'll notice we've not cleared that 1, 2, 3 reversal. So I can't just say, let's buy this yet, because for all I know, this market could really run lower. And so the two-try rule is really going to be our bread and butter tomorrow. Yes, I want to be a buyer, but I can't just buy right now. I'm going to talk about two specific patterns, one off the high of the battle zone, a second one off the deep move lower. We'll talk about two specific ways to buy it. And of course, I'll also talk about if we don't get a pullback and this thing runs. We'll cover the buy side, we'll cover the sell side, and we'll talk about the specific entry setups. And I'm going to tell you right now, it's the two-try rule, and we'll talk about how that plays in. That's going to be our bread and butter here for tomorrow. That's the hardest one, and we're going to dig into that one in a lot of detail tonight on this video. The rest of these are a piece of cake. Well, maybe not a piece of cake, right? But they're going to be much easier than the oil futures. As you can see on the S&P right now, we're very, very bullish. What do we call this? It's a spike. Now, anytime I see a spike in one direction, I know I've got 5 specific scenarios that I want to be ready for tomorrow. 5 different setups. That's a horrible 5, isn't it? 5 different setups. Bob Ross would be turned over his grave right now. 5 setups we're looking for here tomorrow. Obviously, it's a bull market, right? And obviously, I want to be a buyer. That's the easy part. I want to be a buyer, but it's probably not going to give us that clean, cut, and dry pull back and go right back to the high again. Maybe it will, but tonight on the video, we know we're bullish. We know we want to buy at support. We know where we think we're going. Now what I want to do is get ready for those 5. There's a better 5, right? 5 different scenarios. Buying and selling for tomorrow. Tomorrow's Reaction Thursday. Remember, not a lot of professionals are going to mess around with that FOMC announcement this afternoon, right? Small window of time today. We talked about that last night. Tomorrow, it's on, right? Tomorrow, it's on. And I got 5 scenarios we're watching for here on the S&P. The rest of this, very, very similar, right? A lot of these look very similar here. Nasdaq, big, strong break higher. There's no doubt about who has control of this market. It's definitely a bull market right now. But do I really want to buy right into those all-time highs? Not really. Not really, I don't. And so I've got 5 scenarios again here on the Nasdaq. It's almost identical to the S&P. Yes, I want to be a buyer on the Nasdaq, but no, I don't just want to blindly buy at areas of support. We'll talk about if we get the shallow pullback, the deeper pullback, then maybe the failure and the run back down. Don't forget, there's no guarantee this thing keeps going. We could find ourselves down at 8,000 tomorrow morning or tomorrow afternoon, and let's tell you the best way to trade it here tonight on the video. Over on the gold tonight, gold, I know it's getting kind of redundant at this point, right? We got a strong bull market going higher. What is that called? A spike, and we'll talk a lot more details tonight on the video. Spike tells me we know the bulls have control. You don't need me to tell you that. What you need my help, though, is what if it gives you a shallow pullback? What if it's a deep pullback? How do we sell it back down? And I think the only real variable on gold we're kind of waiting to see is, does this range, there was a range, again, gold, FOMC, ranges and FOMC kind of go like, cheese and wine, right? They go together very well. So will that range extend into tomorrow? Will we find ourselves extending tomorrow? We're going to wait and see on this, but I'm going to show you the best way to trade it if we get it. I want to be a buyer on the gold, but I've got 5, again, with that big, strong spike up. I got 5 different things, right, I want to look for here on that yellow metal, and we're going to dig into those and all the glory, right, all of its glory here tonight on this video. Got the gold, the Nasdaq, the S&P, and the crude oil. Before we jump in, though, before we get this video really cranking here tonight, I always appreciate having you guys with me here, by the way, especially ahead of that Game 7 tonight. Before we jump into the video, though, don't forget, make sure you join our mailing list. You may not be aware of this, but just before I publish our newsletter every evening, I send out an email to everybody on our mailing list. I want to make sure you are the first to get the heads up. All I need is your name, your email address. Hit that subscribe now button, join the mailing list, and don't forget, guys, when you join the list, you've also got to go out, check your email inbox, because I'm going to send you a welcome email, and in that welcome email is a verification link and a bunch of great free resources for you. So find that welcome email, hit that verification link, grab those free resources, and make sure you tune in every evening on this newsletter. And just a heads up, guys, every once in a while I hear that those welcome emails get stuck in spam filters. So if you do have any issues, if you don't find that welcome email, check your spam filter. It might be hanging out in spam. And if it is there, make sure you whitelist our emails. That way there's no problems with that going forward. Oh, and don't forget, if you have any questions for me tonight, maybe you're here for the first time, or maybe you've got some questions about the strategy we talk about in tonight's video, please feel free to drop those questions in the comment section below. I always love to answer all your questions. So hit me up in the comment section below if you have any questions, or how about some feedback? What would you like to trade about or change about this trading newsletter? What would you like to do more of? What would you take away? What's your favorite part of this video? That way I know to do more of it next time. Give me your feedback. Drop me some feedback in the comment section below. So any questions, any constructive criticism, it's okay. I got a pretty thick skin. Tell me what I'm doing right. Tell me what I'm doing wrong. What do you love? What do you hate? Drop those in the comment section below. I'm always listening. Oh, and speaking of the comment section below, while you're down there in the comments, hit that thumbs up button for me, will you? Every time you guys and gals take the time out of your day to drop me a comment, hit that thumbs up button. YouTube helps to expose this video to more traders who would love to learn this great 3-step strategy. So please, please, please help support the channel. Make sure you drop a comment in. If not, just to say hello and hit that thumbs up button to help me spread the word about this nightly newsletter. And don't forget, if the comment section isn't quite your thing, you can always call that toll-free phone number. Hit me up on live support. I'm always here. I'm going to date myself on this one, but I actually talk on the telephone. I just did. That's why I'm a little late. I had a great call with a client. this afternoon. If you guys have any questions, don't be afraid to pick up the phone, call the office. No call centers, no phone banks, no wait times, right? I promise. We're a very small family-owned company here in LA. Look forward to answering the call, taking all your questions, helping you get the information you need so you're not running around out there trying to search for stuff on YouTube. All right, guys? In the meantime, let's get this party rolling here. Enough of the introduction. Tomorrow is Halloween. No, tomorrow is not Halloween. That's what everybody else thinks it is. Tomorrow is Reaction Thursday. Why do I say that? Tomorrow is the day following one of the biggest news reports we get as traders. The FOMC announcement this afternoon, right? They cut rates, and of course, that led to a lot of markets jumping here on that, what is assumed to be easy money being pumped into the market. Now, with that said, remember, a lot of people don't even touch this FOMC announcement. Professional traders that have been doing this for many, many years, they know better than to try to risk their hard-earned capital and undo all their hard work just on one major news event. What they do is they get to bed early and they come back the next morning and they trade the following day. Usually the day after FOMC, the day after non-farm payrolls, which is Friday, the day after a major announcement is usually where the money is really made. I know. Yeah, I'm sure there were some folks out that gambled on the announcement, and I'm sure they made some money. But trust me, those gamblers, they'll make it today, they'll give it back tomorrow. Professional traders know the news is noise and to focus on setups during reliable price action, and that's what's coming more of tomorrow. So we really want to get ready for tomorrow morning. Tomorrow morning, of course, we've got some major news right out the gate tomorrow from jobless claims and personal income at 8:30 Eastern time. The rest of this is pretty much a yawner, right? You got some notes, right? You got some bills, but really for the most of it though, 8:30 news tomorrow, right, is going to be our kind of our meat and potatoes tomorrow. We got some known unknowns. You know, as you guys know, we've talked about this all week, right? Brexit, the back and forth on Brexit, that is a known unknown right now. We know it's lingering out there. We're waiting to see more headlines on there. Trade, you know, the U.S. and China, we've had some kind of poking back and forth over the past 24 hours, right? China kind of poking us on our low GDP print today, for example. They've been a little bit back and forth here. We saw that headline today, though, about them canceling the APEC summit in Chile. And then China came right back and said, we can host it in Macau. And so it looks very optimistic for that trade deal being inked sometime in the near future. That is a known unknown. What else do we have happening right now? Earnings, okay, before the open, after the close. Couple more days of earnings this week. Be aware of that if you're trading London and the Asian session, right? Earnings before and after the close right now. And what else? End of month, right? End of month. The end of the month it does what? More volatility. A lot of this is just recapping what we've been talking about so far, right, throughout the entire week this week. So we have a lot of known unknowns. How will Brexit play in tomorrow? I don't know. Will we hear anything about trade tomorrow? I don't know, right? We know we got earnings and we know we got end of month. So expect volatility levels to continue to be elevated in the overnight Asian and London session. Really, the meat and potatoes tomorrow will be that U.S. morning session, 8 o'clock, about 11:30, 12 o'clock tomorrow morning. And don't forget, we're going to be together tomorrow morning in our trade room, bright and early, 8 o'clock Eastern time. I would love to see you there with me as a brand new member. Let's get in the charts tonight. Now we know end of the month, volatility kicks in tomorrow. Yeah, I heard tomorrow was Halloween as well. And by the way, if you want to wear your Halloween costume into the trade room tomorrow, I'm perfectly okay with that. You're more than welcome to wear your costume to work tomorrow if you want to. Just don't let the draperies, right, or don't let the feathers and stuff, right, disturb your trading. But I digress. Let's get this party rolling here. We got some oil, some S&P, some Nasdaq, and some gold. Let's jump into that oil chart here first this evening, because I think oil's really going to be the market that is going to be most difficult for tomorrow. Like I mentioned earlier, we know we're bearish. There's no real question about that. We can easily see this market is bearish overall. We've got sellers obviously trying once, and they couldn't retest the low. They're trying twice, And as of this point, as of recording this right now at 5:30, they haven't retested the low. Now, usually when you see bears try once, try twice, this is usually, notice I didn't say guaranteed, this is usually going to result in a move back higher. You would also think that the cutting of rates would also be something that would be bullish for oil, because with easy money comes manufacturing, comes industry, and comes demand for oil, I would assume. But hey, again, we're not bullish yet. We are very much still bearish. Now, we know that a bull market can turn quickly with a 1, 2, 3 reversal, but we're not there yet. So we know we're bearish, but we also know where we are. We're right down around that low. We had that strong move down earlier this week, had that pop yesterday, sat inside a range for most of today's trading session. The news came out at 10:30 and sunk the market back down to that low. Anytime we have a bear market that bounces off that low, those sellers want to get back down to retest the low. From here, we've got to wait for more information. Do we go through that low? Do we continue through it? Or do we bounce and reverse? Right? Those are really the two most common. There's a chance here we might go sideways inside of a range. So those are really, that's the hard part right now. The hard part is we're sitting right at that low. We're too bearish. I can't buy it. We're too low to sell. So what are some options here right now? I mentioned the 2-try rule, right? The 2-try rule is really going to be our bread and butter on this. So first of all, we'll talk first about buying this market right now, because I think that's that's the only option. We don't have any chance to sell this market yet, and we'll talk about the sell side here in a moment. I've got really 4 scenarios that you want to think about for being a buyer here tomorrow. The first one is going to be a nested 2-try failure coming off the low of this channel. We've already got the bears trying once, trying twice. At this point now, I'm going to look for those short-term sellers to try to sell once and try to sell twice. Then I know where their stops are, and I'm buying into those stops. This will be a simple failure pattern, but because we're so bearish, I'm going to make it a nested failure. Again, to be a buyer right now, you've really got to be patient. Let those sellers, and pardon the term, but let them let them wrap that rope right around their neck. If you try to buy it too early, you're probably buying, you run the risk of buying right into a run lower. Okay, so we know we're bearish. We know we're bearish, but we also know we're sitting right on the low of this hidden channel. Okay, let's get those sellers to try once, up, try twice. Then I've now got bears trying once, trying twice. Now I know right where their stops are. I know right where their pain points are, and I can buy right into that with a failure pattern. Okay, that's one setup to look for tomorrow. Another one would be we go down. We finish this move down to retest that low. We're bearish, but we're at major support. We now look for a crown reversal. 1 try for the bears, 2 try for the bears, trap low. Don't forget, you got to get a trap on this one, because at this point now, they've retested those lows, right? We are very bearish in this example. So we make a run back down to those lows. Okay, we then look for the bears. The bears try once to keep it going. They try twice to keep it going. Trap, or you can wait. And if you don't want to buy the trap, I understand why. It takes some guts, because it feels very bearish that time. You're buying into stops. I'd much rather be long though off that trap, because now you're protected by keeping your stop below that low. If you buy too high on this, obviously now your stop's going to be down below that low. It's just a bigger stop loss. That's all it is. Okay, so just be aware of that. Those are 2 areas of interest to watch for. I would rather have that trap though. Okay, some folks tell me though, I don't feel confident with that trap because obviously we're bearish. So there's 2 scenarios there to be a buyer there. What if we go higher here? If we go higher, there are 2 very easy patterns here. One is a 2-try breakout, strong move up. Let's zoom in on this a little bit closer here. One is a 2-try breakout, strong move up, 1 try for the bears, 2 try for the bears, trap low, and up from there. Keep in mind, this pattern requires a very aggressive move higher, okay? Very aggressive move higher. At that point, there will be tons of FOMO on that chart, right? Everybody's going to be wishing they were in the trade long already, and there'll be a lot of people looking to buy that dip, okay? 2-try breakout pattern there, or the classic 1, 2, 3, reversal, mark that high, mark that low, and we're buying that pullback off that low. Now, there is a chance, it's not that, it's probably not going to happen, but there is a chance that we might stay inside this channel and go up and then get that pullback. I just don't think we're going to get it. I think if the market shoots higher, I think it's going to jump, right? I don't think it's going to. I just don't think if we go higher here, I just don't think you're going to get that silver platter, right? Dinner's ready, time to go eat. I just don't think you're going to get that perfect pattern there. If you do, right? If you do, it might be time to go to Vegas because your luck is obviously better than mine, right? So if we do get that pullback, now look for that straight seller failure pattern that we talk a lot about on this newsletter. At that point, we'll know these bulls have their edge now. Does that make sense? So if we make that run, we pull back to low of that channel now, you're going to pull back underneath that moving average. Let those sellers try to sell off the moving average, right? Let them try to sell it again. Now we know where their stops are, and we're literally buying right into those stops, right? It's a failure pattern into a pullback pattern combination, right? Failure into pullback. So I said 4, there's 5 different examples, and you'll notice pretty much all of them used what? The 2-try rule, right? It's the 1, 2 nested failure, buying into stops. It's the run lower, 1, 2 trap low. Again, crown reversal pattern. It's the 2-try breakout, strong move up, 1 try, 2 try, trap low. Or it's, of course, the 1, 2, 3 reversal, mark the high, find the hidden channel now, right? And then buying pullbacks on the way up. If I had to really pick and choose, I would say you want to make sure whatever you do, you're getting into something before you get back up to that high, right? So obviously, if it just runs all the way up and then pulls back, might not be a good spot to take that pattern. You know what I mean? Just make sure you're getting in as low as you can. So now we've got our plan set here for the buy side. The buy side is again, it's relatively easy if you understand how to use what we call the 2-try rule. How do you sell this market now? There really are 2 scenarios that I can look to sell. One would be continuation to that low, which means you're going to have to get a 1, 2, 3 breakdown, mark up that low, mark up that high, and then sell off that high. I can't even think about being a seller in this area down here. There's too much rejection. You're going to have too many sellers taking profit down there, too many buyers trying to pick a bottom down there. So if we do want to be a seller on this, we're going to have to get a strong move down, and then those sellers are going to have to show us, they're going to have to really beat their chest and really show us that they can get to that low here. I'm going to mark that low. I'm going to mark that high now. That creates my new hidden channel, and now I can sell right off that high. Make sense? Where's my target down there? My target now is 53.62 is our next big milestone as we go lower. I got 62, I got 85, right, sitting there from late last week or from early last week. So we know where the levels are trying to go. What else could I do? Well, let's say we go sideways here. You'll notice there's a range here. So if we go back into that range and we sit here for a while, remember, the longer we sit inside that range, think of it as the longer you stay at those lows, the more votes are being cast for the bears, okay? So the longer we stay pinned to those lows, what's happening? Accumulation and distribution, right? You've got sellers taking their profit, but as it goes higher, you've got more sellers coming in. So if we go back to the downside here and we sit and we start going sideways here, that pretty much negates the buyers. And that now tells us, use that range to find our range expansion levels, right? Size of the range determines those resistance levels overhead, and then we look for that. We look for that basically 2-try failure pattern, right? We go up, wait for the pullback, wait for those buyers to try to buy off that moving average, and we're trying to sell now right into those stop losses. All you're doing is you're waiting for a breakout pullback pattern to fail. Again, don't forget, this is if we sit sideways inside of that trading range. All right, guys? Those are the two sell scenarios. One is a 1, 2, 3 breakdown. Mark the low, mark the high, sell off that high. Do not try selling the breakdown. It's probably not going to end well, right? You know what's going to happen. If you try to sell it as it's going lower, that's the one time it's going to pop right back up. But as long as you don't, it'll clear right through that low without you. Wait for that pullback from there. Or we've got to settle in here into a range and sit there for a couple hours overnight, right? If we see them sit here, now that really negates all the bulls. Now we wait for the chance to sell high. Ranges tell us sell high. How do we sell high? We wait for that profit-taking rally. We trap in those rookie buyers trying to buy the breakout pullback, and we sell into those stops for a short right back down into that trading range. Boy, great analysis here. Great plan here for tomorrow. All we need now is a little bit more information. Now, if you're here for the first time today, I want to give you a lot more about all the patterns that we've talked about so far. Unfortunately, I got to keep this party moving. So if you want to get a deeper dive into this entire trading strategy, make sure you grab that free trading class in the upper right-hand corner. The free class, you'll learn my 3-step strategy. You'll learn my 4 favorite entry patterns. You'll see hundreds of examples of how we apply those patterns to our favorite markets. Take me up on that offer. Grab that free course in the upper right-hand corner and learn more of the strategy there. Also, if you're here on the website right now, if you're on the blog at Sideways Markets, I'll put a big red button for you right below that video tonight on the trading blog. So make sure, pause the video. Not to worry, I'll be here when you come back. Pause that video and grab that free course. In the meantime, let's keep this party rolling here over on the S&P. Now, the rest of this is going to be relatively similar, so I hope I don't disappoint you. It'll be a little bit redundant, but the rest of these markets are pretty much, they're not identical, but they are all very, very similar. They all have a very strong spike going higher. Now, a spike going higher, there are ultimately 5 scenarios I'm watching for. One of those scenarios, let's do this, right? Let's put a little breaker right there in the middle. Let's see if this works here for us, right? 5 scenarios, right? One scenario is going to be a spike and range, right? Spike, let's do this. The first scenario is the easy one, right? Strong move up, a pullback below the moving average, a failure into a pullback combination. Okay, that's the easy one. This is the one that everyone's hoping for. Okay, we'll see if we get it. Okay, this is, again, I'm going to go over a lot more of these when we get there. But again, strong spike up, right? Strong spike up. Look for a seller failure pattern underneath the moving average, followed by a pullback pattern above it. Second scenario, we go up and we come right back down. Right? We come right back down. We go below the moving average and we jump off the moving average. What is that called? 1, 2, 3 reversal. Mark the low, mark the high, sell off the high. Okay? Those are the most clean and cut. Those are 2 of the 5 scenarios that we want to be ready for tomorrow. Hopefully we get the first one. If we don't and we get the second one's just as easy. It just takes some more time, right? Be more patient with it. Now, 3 more scenarios. One of them is a spike and range. Spike and range, right? We go sideways up top here. What do we do with spike and range? 1 try, 2 try, back up in. Bears try once, bears try twice. Think of it like a breakout pullback, right? We run out, the bears take it lower. They think the market's breaking out. They try to sell the breakout pullback. It's not a bear market. You don't want to be selling anything besides a bear market. And of course, we fail and buy back up. That is what's likely tomorrow. Okay, this is what's most likely here, right, in the overnight, is that range. Another one, spike and channel. Spike up into a channel. Okay, this is number 4. This, I hope we get it. Okay, these are always pretty easy. Spike and channel patterns, you can buy the low of the channel, but most importantly, I want to buy back in the base of that channel. That's where the money is, right there, right? That's where the money is, right there. You can buy early in the channel low, right? You can buy that channel low, but really where the money is buying that little deep pullback, right? And usually what happens is it's going to be the same thing. We come over, the bears try to Right? The bears think it's a reversal. The bears sell off the moving average, and we're buying into those stops. Okay, what's the third one? The third one's the most challenging. You ready? Third one's a flag pattern. Flag patterns are notorious for being very slow pullbacks. 1, 2, 3. Now, what is the difference between the flag and the reversal? The reversal kicks you right in the teeth. Okay, the reversal, it runs. A flag pattern is slow. That is the giveaway. If I can spell here. I'm not an English teacher, as you can see, right? Slow. So we know a flag pattern, right? What's going to happen is you know it's a flag pattern when it pulls back, and it's barely moving, right? It'll be very, very slow. Flag patterns, there are two ways to trade them. One is a failure underneath. The second is a breakout pullback up above. Most important thing about this, though, let's do this one over again, right? That way I can finish that cleanly, and you know what I'm talking about, right? A failure underneath, breakout pullback above. Breakout pullback should be a trap high. Failure should, of course, be underneath that range. There are 5, right? There are 5 scenarios right there that we want to get ready for here tomorrow. Now, what I do for my clients every morning is we go over each of these as we're watching the charts, right? So we'll do this together tomorrow, obviously. But ready? 1, 2, 3. Grab your screenshots right now, right? Grab those screenshots. Okay, that way you've got your roadmap for tomorrow. The first one, right? The first one is the ideal. We get below the moving average. The sellers try. The sellers fail. Failure into pullback back up. The second one is also very easy and very reliable, I might add. Okay, don't be afraid of a reversal. Okay, be afraid of trying to predict a reversal. You'll notice in this second example, I am not trying to predict anything, right? I am waiting for a 1, 2, 3 reversal and selling it off that high. It's a very reliable pattern. Okay, number 3 down here, that spike in range. The hardest part about a spike in range is waiting for the range. It is, right? It'll go sideways on the screen, and of course you'll have that seller failure, right? Think breakout pullback pattern underneath the range, whoop, right back up to retest the high, right? Number 4, smack in the middle. This would be lovely, okay? Spike in channel. Now you know a good spike in channel because it'll give you higher highs, okay? That's the giveaway to a spike in channel, right? Ranges, spike in range will go sideways, right? Spike in channel will go higher. You'll see those higher highs there. Mark up the channel, find the base of that channel. If you watch the newsletter regularly, we talk about these quite often. These are very common patterns. And again, wait for the money is made later in that channel on that deep pullback, get underneath the moving average, and then again, think of a breakout pullback failure going back up to retest that high. Last but not least, this is the hard one. What makes these so hard is that pullback is slow, but that's the giveaway, right? It's slow. That's the giveaway. Look for the overshoot. What happens is people love to try to sell that breakout pullback underneath the low. One thing that happens, though, is it oftentimes snaps and runs right back into that range. I'm not going to lie. That's a gutsy trade right there. Okay, that's a gutsy trade. You've got to have a lot of confidence in this being a flag pattern to be a buyer off that, obviously. Okay, more reliable, maybe not more reliable, but a trade's a lot easier to take is a second one. The second one, the key is you'll notice it's a trap high up here. The reason why you want that trap high is because that's going to get sellers selling high. You want to get those, remember, at this point, there's been the wool pulled over their eyes, right? People think this market's bearish now. It's not bearish. Why? It's not running, right? Like we saw in the reversal. It's not a reversal. It's a slow, methodical, stingy little pullback, right? It just looks like a channel. It's not a reversal. And so what happens is when it goes higher, the bears come in, they go, oh, perfect, trap high, sell it. Well, it's not a reversal yet. We haven't seen the 1, 2, 3 and the collapse. Trust me, when a market reverses after a big move up, it'll collapse. It's not going to hang out. It'll collapse. Okay, it's tough to predict the reversal, but once you see it, you know it. Okay, the personality is very, very easy. So you wait for that trap high, right? And then, of course, you buy that pullback. What you're doing is you're basically running those stops, right? All the stops are sitting right there. And if we get a nice little candle coming off that high, those sellers who got in, they're going to get run over, and the fuel will pour gasoline on that run going higher. All right, guys? Now, again, I'm just simply marking this stuff up, right? I'm just drawing this stuff up right now. And again, last call for your screenshot in 4, 3, 2, 1. All right, so now we know all 5 scenarios, right? Now we know, going back to our charts now we know what we're looking for. Okay, get that strong move up, right? Give me that pullback underneath the moving average. Okay, get those bears to try to sell off of it. Failure into pullback combination, right? Failure into pullback combination. And again, I'm just simply marking up these charts. Grab that free course. You'll see hundreds of examples of how we apply these patterns to our favorite markets. All right, not to mention you'll learn all the bases or all the basics of it so you can follow along with me. When I talk about a nested failure or a two-tribe failure or a pullback or a trap, you'll know the rules of those, right, of those patterns. Anyways, okay, so we know that one. We also know we may also reverse. I mean, for all I know, this is, again, FOMC. We might reverse, right? We might make a run lower. We might get back below that moving average. Bears jump off of it. If we see that jump off the moving average, right, this thing's going to go back to retest those lows in a heartbeat. I'm going to mark up that low, find my hidden channel, right, and we're selling off that hidden channel. Remember, a reversal is it's obvious. The personality is blatant. It's easy to see that it reverses because it jumps off that pullback. Okay? Now, third scenario is the range. Okay? We stick up here. We stick. Remember, the longer we stay up here, what is it? Think of it like another vote being cast for the bulls. The longer we stay up there, the more votes being cast for the bulls, right? All it's happening is it pulls back, buyers buy more. Pulls back, buyers buy more. That's all that's happening. If you're an old school trader reading some of the old dusty books off Amazon, right, it's called accumulation. You know what I mean? They keep accumulating more contracts as it pulls back. Price goes back to the high, they take their profit. Price goes sideways. What's the plan if it goes sideways here? If it goes sideways, wait for that move lower, get that moving average coming over, think breakout pullback, right? Breakout pullback, failure. Back up from there. What if it's a spike in channel? We keep going higher here, right? Spike in channel. What do? We mark up the base of the channel right there, right? The base of that channel. We wait for that pullback. That's going to confuse the sellers, right? Remember, guys, there's a lot of rookies out there that are trading without a plan, without a mentor, without a coach, without anybody to hold them accountable, right? They're on their live account. They shouldn't be trading yet live. And they're going to walk into situations that they are just simply mentally not prepared for. That is your opportunity to make some money. I know it sounds bad, but unfortunately, that's the way trading works, right? Trading works. The way trading really works, the real world of trading it's the educated, experienced traders teaching the lessons to the inexperienced, uneducated, and undisciplined traders. That's really all it is, right? That's really all it is. These are professional traders that go, no, this is not a bear market. I know the odds of a reversal are only about 30%. The odds are much higher going back to retest the high. So instead of trying to sell that pullback, right, the odds are not on my side. Professional traders know that when we see those rookies trying to sell that stuff, we know a rookie trader, again, is ill prepared for those situations. That's your chance to capitalize on it. Okay, and again, don't take it the wrong way. We were all rookies at one point. I paid my tuition. You might be in the process of paying your tuition right now. We all pay our tuition to the market. We either pay it by losing money to better traders or more experienced traders, not smarter people, just more experienced traders, or we hire a coach, and we literally cheat the system, right? We hire a coach, and the coach says, "Don't do that. You're gonna get your pocket picked doing that," right? Everybody has to pay their tuition, whether you lose the money yourself or you spend it on your own training by working with someone who can help you cut the line, right? Get you right towards the front of the line. Now you know what to be looking for. And in all reality, that's what we do in our trade room, right? In my trade room every day, I specifically tell my clients, right, we are not selling that pullback. I don't care how good it looks. We're not bearish yet. Okay, now the flag. The flag is the one that's difficult. The flag pattern, remember, you're going to know it's a flag because it'll be slow, slow, slow. What happens is when it pulls back slowly like that, after about a half an hour, people go, well, it must be bearish now, right? I mean, this thing is, no one's doing anything. It's really slow. And so what happens is sellers now start coming in and they start trying to sell that next pullback. The reality is we haven't collapsed. We haven't 1, 2, 3 reversaled yet. We haven't dumped yet. Trust me, if this market turns bearish, it's not going to, okay, everybody, get ready. We're going, no, there's no like neon sign. It's going to go bam, right? It's going to dump. There will be no text alert, right? There will be no heads up. We're going to go lower here. It's going to hold that pullback off that moving average, and it's going to dump, right? And I wish I could tell you, I wish there was some special indicator or some special tool to predict that dump, all right? And please do not buy into the hype of order flow and divergence. Believe me, if it was as easy as order flow, I wouldn't be here teaching you this right now. I wouldn't. I'd be saying just get the order flow machine, right? That's not going to solve it. Looking inside the candlesticks is not going to tell you when a trend reverses. It's just not, all right? So what we know is a reversal will dump, right? It will dump. It will not go 1, 2, right? That's a flag. That is a flag. Mark that channel. What you want to do is you want to make sure you know, wait for those sellers to try to sell it. Once those bears come in, try to sell high now you got them. Now you got them right where you need them. You need those stops to get hit up there, right? It's a nice little breakout pullback. It's a seller failure, right? In the form of a breakout pullback off the high of that channel. All right, guys, got a great plan there for the S&P. We know the plan. We know the ideal scenario is deep, right? Deep pullback, failure, pull back up to retest the high. Get ready for a range, though. Get ready for a range. Usually these types of big moves like this, they usually end up going sideways up here, and we're waiting for that 1, that 2 to be a buyer underneath it. And again, make sure you join that free course so you can actually see more examples of those patterns over on the Nasdaq tonight. Now the Nasdaq is a little bit more important. We stay disciplined tomorrow because you can see that 27 3/4. They couldn't even close above it. So right away we know we're bullish, but there is smoke billowing out of the engine right now. We know we're bullish, but it's starting to, isn't feel as strong, right, as other markets here. So we're definitely bullish. Can't sell it yet. Remember, the ideal scenario here is we know we're bullish. We want to be a buyer at a level of support. I've marked up these highs, brought it down to that low. I mean, this will be ideal. We pull back. We pull back, we get underneath the moving average. The sellers say, we're bearish, I told you. They try to sell off that moving average. We're not bearish yet, unfortunately. You know why now. And we look to buy into those stops, buy that pullback, and our target's back to retest the high. A failure into pullback combination. We see so many of those failure into pullback combinations every day, right? Across all markets. Grab that free course, and you'll see what I'm talking about. Right? Or do we get below the moving average and then dump, right? And then dump. Trust me, you'll know it. When the buyers pull their bids, right? When they remove their buy orders, this market will collapse. Mark the low, mark that trend line, find that hidden channel. You'll learn more about that in the free course, and we're selling off the top of that channel. This is obviously not drawn to scale. It's just that's the pattern you're looking for on the move back down into that trading range. Okay, now where we have our range, speaking of range, right? Be ready for that. Be ready for that range. Very likely. It may not be this size, it might be a little bit wider, it might be a little bit narrower, but be ready for a range up here. The longer we stay stuck at these highs, the more votes are being cast for the buyers. And of course, what do? We use the size of that range to find our support level, and we look for then the breakdown. The moving average comes over, right? Look for those rookies trying to read divergence signals. Oh, divergence. Oh, hidden divergence. Better sell it. No, it's a bull market. Those are the times where right? Those unfortunately, those inexperienced traders are going to let their emotions get the best of them. That's your chance to make some easy profit. Okay, the easiest money you're going to make in trading is when you're getting in and the opposite side, the counter trend traders are getting out. Because when you're going against the trend, you're white knuckled. Any little spook, you're going to get out. You know what I'm talking about, right? I know I'm not the only person that does that. Or when I was a rookie, right? When I was a rookie and I tried to call a top, you're on the edge of your seat. You don't even need a full chair. You need like the little corner of your chair. You're white knuckled and stressed when you're trying to reverse that trend, aren't you? All it takes is a big green candle, and all those sellers, all those counter trend sellers, they're going to get spooked. They're going to become buyers because there's nowhere to run. There's nowhere to hide. If you're stuck short in a bull market, it all comes down to how far will you let that trade go against you before your broker gets you out or you get yourself out, and that's going to throw gasoline on it and run this thing back up to retest those highs. The flag is always a difficult one. Remember, the flag is quiet. 1, 2, 3, quiet, right? It's not one dump, right? That's a reversal. 1, 2, 3. And I say 3, I should mention this. I say 3 because the rule of 3 is very, very common in a flag pattern. Again, now you know, get those sellers to try to take the bait, right? Let those bears think the market is bearish, and who knows, maybe they're successful. Maybe it dumps then. And then you know, 1, 2, 3, sell off that high. You're prepared now to be able to capitalize if it does make a run. Again, I can't predict the reversal. It's just not reliable enough. Okay, there's no amount of indicators that can stack on top that will make that filter work. It's just the momentum is not there. So instead of trying to predict that reversal, wait for the reversal, and try to run out anybody who is trying to predict that reversal. Okay, that's all you're really doing right there. Okay. Also, too, spike and channel. Now, spike and channel here might be a little bit tricky because you've got to get through this high, right? So we're going to have to see these buyers hold up here and then get that pull back. Get the pull back, get those, right? Get those seller failure into pullback combination. Same stuff we talked about in that earlier slide. Great stuff. Great stuff. Last but not least, and again, right? And again, the failure pattern we talked about, right? We go down, failure off the moving average. We talked about that first, right? So seller failure, it's all the same stuff. It's all the same stuff here for tomorrow because, again, it's all pretty much same chart. All right, guys? Last but not least here, over on the gold tonight. Gold, I think, is the one that really kind of, we might see that range from earlier in the day come into play here. So, first of all, gold has a ton of open space to run here. Gold looks really, really attractive if we can get this thing to continue going higher here. We'll see. We'll see. You would think that, the FOMC cutting rates today, you would think that would lead to a pretty good rally tomorrow. But, if I think too much, I get a headache, right? So I don't want to think too much. I'm going to trade what I see. Okay, all kidding aside, right? All kidding aside. Trade what you see, not what you think. What do we see right now? We see a very strong bull market. Anytime I see a bull market like this, I want to do what? I want to buy at support. So what I do is I find my support levels. Drawing off the channel, finding that hidden channel. That is a delicious hidden channel right there. That is a hidden channel. I'll take 2, please. I will take 2. It's got a beautiful spot for a trap low. I mean, that would just be, like I said, hopefully we get something like that. Hopefully we do get that perfect, right, hidden channel pullback. And obviously what that would look like is I get a pullback down to the low. The moving average comes over, right? Moving average cross, momentum divergence, order flow, whatever. The rookie traders, the traders who are not trading with a plan, they get easily roped into those short-term pullbacks. Now we know right where their stops are. Now we know right where their pain points are, and now we can buy into their stops, wait for that pullback, that classic failure into pullback combination, and oftentimes that leads into a trap just above that retest. So 3 ways to look at this, and again, you can apply this to all the previous charts, except for oil, right? Oil, we're not there yet. But what is this? These are three patterns here. That's a seller failure. Remember, we're doing it always off a support level. Okay, we're not just doing it out of nowhere. Failure pattern into pullback pattern. And then as we go higher here, trap low. Because you don't want to buy into the high, right? Trap low as we go. All right, three patterns there. Okay, what if it reverses? What would reversal look like? Strong move down. Okay, pull back to the moving average. And then what? Strong move off. How do you know it's a reversal? They jump, right? They jump. The sellers walk away. The buyers walk away and they take it. Mark that low. Mark that low. Find that hidden channel now and sell off that high. Okay, and you'll learn more about reversals and hidden channels as part of that free course that I mentioned earlier. All right, where's my target on the reversal? Always back to retest that low. Always back to retest the low. Same thing for the S&P and the Nasdaq. If they get the reversal, Nasdaq goes back to 8,000. If they get the reversal, S&P goes back to, I forgot the low of day today, but right, you get the point. Okay? Now, how about a spike in channel? Spike in channel, strong move up, pull back, higher high. Mark up the high, mark the low. Okay, you can buy the low of that channel. Okay, but don't wait too long. Don't buy too late. Mark up that low, wait for that deep pullback. Moving average comes over. Bears try to sell off of it. Again, the bears will think this is a reversal. It's just a profit-taking pullback. That's all it is. What happens is on a spike in channel, because there's no deep pullback yet, buyers are gonna get weary buying here after that 1-2, right? They're gonna get weary buying too high up there. They're gonna want to wait for it, and the price will pull back. When it pulls back, again, you're gonna have traders who go, okay, I guess we're going back to those lows, and they're gonna try to sell that next pullback. Usually, what happens is there's a moving average cross here. And that moving average cross is what signals a lot of the rookie, automated systems, things that I used to play around with when I was a kid, okay, many, many years ago. Okay, there's a lot of stuff out there that's still being used by, inexperienced traders because they're simple systems, right? We can keep it simple, but you have to know momentum. You have to know what direction is this market in control. If you're trading against momentum, it doesn't matter what pattern. It doesn't matter what indicator. It doesn't matter how powerful the correlation is. If you're going against momentum, your odds just simply are not there. So I know from experience, that's how I actually discovered this pattern. I used to be the guy or gal, that would sell that first pullback. And it wasn't until I talked to my first trading coaches, and he said, Joe, if you would have done the opposite of today, what you did today, you would have made a lot of money. And I remember thinking to myself, that's just crazy enough to work. Do the opposite of what I've been doing. And literally, that's what I did. I went back to the drawing board and I said, okay, what have I been doing? I've been taking these counter-trend little short-term pullbacks. Why don't I do the opposite? And that's what led to the discovery of a failure. And then from there, I added on the pullback because, of course, you watch charts almost 15 years. We'll pick up on that. And then as we go higher, we don't want to buy high. We want to buy a trap, right? We want to buy a trap. So trap low, pullback, and failure. So, okay, right? So you can see how that sequence kind of lines up. But you got to wait for the pullback, though. Okay, what else we got? Range. Range is pretty easy. Now, I think the range here is going to be, it's tough to tell. This move up is separate from that range earlier. So, as you can see, it almost looks like we're getting the range here already. The longer we stay up there, the more votes being cast. Wait for the pullback. Wait for that moving average coming over. Bears try to sell off the pullback. It's a breakout pullback failure, buying it off of that low. Or do we pull back and just kind of start going sideways down here? If that's the case, this will just be an extension of that range. And what I'll do in that scenario is I'll grab the pendulum swing. The amount of the move above is the amount of the move below. That becomes our new support level. Let's mark that in orange, right? Does that make sense? The amount of the move above, again, this is if we go back into that range from earlier on in the day, mark up that pendulum swing. The amount of the move above it is oftentimes the amount below it. Okay, that becomes our key level of support now. We know where support is. Now find the entry pattern. Wait for it to go lower. Get those bears to come in. Try to sell off of it. We call that a 2-try failure. 1 try for the bears, 2 try for the bears. It's called a 2-try failure, but make no mistake, it's just a seller breakout pullback failure. That's all it is. All right, guys? And again, right? And again, we know if it reverses, strong move down, hold that pullback, and jump, right? Sell off that high from there. Target, of course, back down to retest that low. So again, I know I'm repeating myself in a lot of this stuff, but a lot of them are pretty much identical. Gold has a ton of space as we go higher here. So if it does want to keep going, right, mark up that channel, wait for that pullback, get your failure and go, right? If it really runs, if it opens up and just kind of runs higher here, don't be afraid to go for another spike in channel. 1, 2, 3. Mark up a new channel overhead. If it runs, find a new channel and buy the low there. All right, guys? So, the same principles apply over and over again. And don't forget, we are just scratching the surface here on this video newsletter. I go over so much more in our video classes here at School of Trade. Don't forget, we got a great beginner course. Okay, a lot of beginners never learn the most important parts of day trading, the fundamentals. You build a house on a foundation of sand, and don't be surprised if it all comes crumbling down here. Our beginner course is a great foundation for a successful trading career. Everything running your business the way it should be. Okay, not for gambling, but for long-term success. Our intermediate classes will teach you more about all the technical analysis, all the patterns, all the charting stuff. Everything is detailed out in the intermediate course. And then we talk strategy in the advanced course. Right? Strategy, getting in, getting out, managing positions, managing risk, using volatility. We go over our trading plan. We introduce the strategy, the 3-step strategy in the advanced course. And on top of that, we get together every morning and we execute the plan together. Because let's be honest, I could teach this trading strategy to hundreds of thousands of people and only a few of them would actually have the discipline to do it the right way. What I do is I demonstrate the right way to execute that plan together with all of our clients every morning in our trade room. So make sure you get registered as a brand new member. If you're on the website right now, grab the advanced course. If you're on the YouTube channel right now, all the links are in the description of the YouTube video. If you're on the blog right now, there's a big blue button right below the video tonight on the trading blog. So make sure you get registered and come join me tomorrow for Reaction Thursday. If membership is not right for you at this point, that is perfectly fine. I always love having you guys here, but make sure you check out the free trial because part of that free trial is your free trading course, a free pass to our trade room. You'll learn everything in more detail we talk about on this video. That way you can get the most of our time together every evening on this newsletter. Don't forget, call that toll-free phone number right next to my ugly mug, right? Use that live support tool there and keep in touch. Keep in touch. I realize you might be alone watching this video right now, but you are never alone as a client of mine. So call, email, jump on live chat, jump on Skype, whatever the easiest way is for you guys to reach out and get more information. Enjoy the game tonight. Game 7, World Series. Who you got? I'm not going to lie. The Nats, I think I'm rooting for the Nats here tonight. They knocked out our Dodgers here in Los Angeles. So where I come from, you gotta cheer for the team that beats you, right? So I'm rooting for the Nats tonight. Who you got? Drop me some comments in the comments section, but don't stay up too late because we don't want to miss out on tomorrow's Reaction Thursday. As always, guys, thank you so much for being here. It means a lot to me that you join me every evening in this video newsletter. So keep in touch. Don't be a stranger. If I don't see you guys tomorrow morning at the opening bell, I'll see you guys tomorrow night in the next edition of this nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.